Yo, welcome anyone that's already here sitting around. I don't think there's too many people. We kind of did this kind of really last minute. We'll give people a few more minutes to get here, um, and then we'll just talk a little bit about what happened, where we've been, and then we'll get right into it, I think.
Been a couple of weeks, 4 weeks.
Yeah, it's flowing by. Things have been crazy, both in crypto, the world, real life, just absolutely every aspect of anything that you could imagine, at least as far as I've been, noticing.
Yes. Okay, sounds good.
We'll give everyone a couple more minutes. I guess we'll talk about for now where we've been, and then uh, anyone who's going to be here at the start's going to be here, and I think we can get started. So
Yep,
yeah, so we had our first episode. We really enjoyed it. Hold up, are you wearing headphones, dude? I think I hear myself. Do
I am. Try again now.
yo, I can hear. Is your
Uh,
mic too close to your earphones or
It shouldn't be.
something? Maybe it's just me. Maybe I'm just fucking out here with the best ears in the world. Anyway, we had our first. Thanks, Rosie. Yeah, so I we had our first episode. It was really cool. Had a lot of fun. Um, and at the time, I was um, working here and there on some things, and this was my primary thing that I wanted to start working on. But pretty much right after we started, um, I got a bit of a bump up in what I was doing, and I got a bit more responsibility. It didn't really matter because I still had time for this. But then I got sick, so I was sick for a week, and then I started getting better. And my partner went on a trip, and then she came back and had COVID and gave it to me. By the way, as soon as I said the word, I just realized I just got us fucking blacklisted. Boom, done. Anyway, she gave it to me after like 5 days, and then I was sick for a good week and a half, 2 weeks. I finally started getting better, and I was like, um, hey Aki, do you want to come to a podcast? I'm back. And he goes, bro, you're never gonna believe it. I got COVID, and then he's been sick for
I've got COVID, but I was pretty sick.
whatever
Pretty
he
sick.
had. He was dying. I just say that
Yeah,
because that's the easiest one. I assume
it's the
everyone that gets
easiest
sick
way.
has it. Anyway, I got sick with something else. But either way, it was a very unfortunate series of events. Um, but we're finally both back at it after this unfortunate few weeks, and yeah, things have been crazy. In crypto, a month is a very, very long time. There's a lot of things that happen. I've seen market sentiments change 4 or 5 times since. It's been a bit of a ride.
Yes, yes, it's been a roller coaster, and as you said, 4 weeks feels like 4 years in crypto. So even just having a day off sort of feels like you've had a week or a month off, and it's pretty tough.
Yeah. So anyway, get into this episode, guys, and girls. Girls like crypto too. Everyone likes money. We all like money. Children even. You know. I remember as a kid saving up like the 10 cents you get back if you went and bought like fish and chips. Anyway, I mean, again, let's stay on topic for this episode for once. This episode, how we're gonna do it is Hayaki's been, taking on some more research and learn a bit more. So he's gonna host the first half of this podcast, and I'm pretty much just going to antagonize him off the top of my head. I kind of know what he's gonna be talking about, but I don't know the points he's got or the research he's done. So I'm pretty much gonna just try and um, put him on the spot every now and then. He'll be taking us through some things to do with market sentiment towards a couple of things that have occurred in the world and some things that he thought was important in his research. And then I'll play the devil's advocate to that. And then after that, we'll get into some more simpler things, carrying on from our last episode where we finished off talking a little bit about impermanent loss, and taking a step back for beginners, where I will talk about how to get on the blockchain and what to think about when leaving a centralized exchange. And yes, we will be assuming um, that the users are on a centralized exchange at least. We won't be talking about bridging and stuff. That's a little bit more specific, but just what to look out for as you leave a centralized exchange and using a product. Anyway, Hayaki, you can take it away.
As Stinky said, I want to go over some market reactions to just global events, war. Obviously, I wanted to present a lot of this about 4 weeks ago when it was sort of fresh, but it's still super relevant since it's a timeless thing that happens. Um, Obviously, so during war, people generally, you'll notice market sentiment goes down and people start investing more into gold and silver because it's the quote unquote safer assets to invest in. So you'll normally see though like the prices go up during times of war or economic crisis. And generally your stocks and crypto are going to bleed. So there's always going to be a rebound time. If I can, I'll provide some graphs in the Discord as well that I've got. But generally, there's a bad way to put it, but a buy the invasion time, where you'll see generally after a deep decline, you'll see the graphs will have a large pinpoint where they react well and start an upwards trend. This happens generally about 4 out of 5 times in history, and you can call that the accumulation zone. Um, so in historically, the market has always deemed stocks and crypto as a riskier investment, whether that's through war or any other global event. It always generally has an effect on the market, and as we've seen recently, and quite recently at that, all of our funds, if you're in any alts and blue chips and stuff like that, you'll see your funds diminishing pretty quickly. Um, and you can certainly see, but you can also see, sorry, the benefits and why crypto might start doing better in the future when these things happen. So through obviously the sanctions and stuff that happened during war, we can see funds being cut off from banks and the stock market and everything like that. Through these sanctions, the countries no longer have access to their funds, which creates a need for decentralized currency. This is shown when Ukraine was accepting Bitcoin. We hadn't quite gotten to the rebound area, but it certainly was an accumulation zone where they were accepting Bitcoin. Now we're in that more upwards trend. Um, and as I think as we progress further and further, we're going to see a lot more adoption into decentralized currencies because it's something that can't be obviously, oh, not can't be, but is a lot harder to control by centralized figures, and you can't really shut it down like the banks and everything like that. So just having that freedom to send money wherever you please is certainly going to be very, very valuable um, in not only the near future but a long, long time.
Yeah, I have something here. So
Mm,
so before, as the war started, there was a lot of people that were, a lot of gold maxis who are out there, celebrating, this is the reason we buy gold forever. It holds its value, and then bad things happen, and we start winning, right? And then they were like, your speculative assets in crypto are a dog, they're gonna bleed. But from what's happened so far, crypto's kind of a bit of relief for accumulation, and um, the things that had impacted it before this more were the rate hikes, especially by the American government and the what are they, the SEC or the
yep,
Fed, the
SEC.
Fed
Yep.
chair. And I guess, why do you think that most people expected those traditional assets to do better, and why did crypto, like, I guess, not die? Obviously, some people thought it would do okay, but there was a lot of speculation that people would not trust in it enough, and it would collapse completely, I guess. So I feel like that didn't happen, and I guess you started touching on it, but I wanted to get your ideas on why you thought crypto kind of almost did better in the face of war than it did in the face of rate hikes and interest rates.
I mean, people. It's common knowledge. I'm sure everybody has a group of friends, and you might be the only person involved in crypto, and a lot of people think it's going to fail because they're not educated in the space at all, essentially. But so I think it's pretty common for normal people or other people to assume that it's going to fail, especially in times of war, because it's seen as a fad, or it's meant to follow the same market sentiment that their stocks and everything else have followed. So I think in times of war, it's shown that it is keeping, oh, it is stabilizing, and even through these times of crisis, it is still a market that can be traded upon, and it's a market where funds can be distributed or moved with relative ease, right?
Yep. So okay, I was kind of stitching you up there on purpose. But I actually I do think your last point may be one of the more relevant ones. I do think that the reason people thought it was gonna fail was because they expected people to go back to a fear and base instinct thing from history, and well, that started to happen. I think it became very clear very quickly that moving a large amount of cash and gold or whatever else out of a war zone is actually really difficult, even if it's a landlocked country, right? And I think the reason it was more relevant that this knowledge was like kind of already set up was because of Canada. I know that has nothing to do with the war, but just the general social climate of talking about crypto and being like, well, hey, this government was trying to like shut these people down, and crypto helped get around it, regardless of whether it was going to be used for a wider spread thing is a different discussion. It's just it does have a use case, which is the start of anything. Anything needs to start with a provable use case that happens over and over again. And then when war came and people were trying to flee the country, there were like ambassadors and stuff trying to flee Ukraine, and they were getting stopped at borders with like lots of gold or cash or jewelry or whatever. And because they were physical, they could be taken off them or questioned, or anything like that. So yeah. Anyway, your last point I do think was the more fire one. Anyway, I'll leave you back to it.
No, no, you're right. You're right. That's what you're here for. No, nail in the coffin. Um, so pretty much, I would encourage, and it's a little while back now, back towards around the 10th of February. If you are any good of charts, if you have a look at the charts, if you do, and it's bad to put it this way, but when you are trading in the market, there's money to be made in global crisis if that's what you're looking for. And if you invested back into uh, if you look at back at the 10th of February at the gold chart, which is when the first news came out in the US urging their citizens to leave the Ukraine, we saw an instant rise. And then again on the 16th of February, we saw a large rise, which correlates to the world news around not only the fact that the NATO leaders have released a statement saying they're hoping for the best but preparing for the worst, which creates mass panic in the markets, as we know. But also that tensions are rising between China and Taiwan. So not only having one, but teasing at a second global crisis where if you want to follow the market that way and trade the market that way, there's certainly opportunity to do that. Um, and then obviously on the 25th, after Russia officially invaded Ukraine, we can see another rise of gold after that as well. So I mean, if you are looking to trade these sort of assets, I think knowing the news that's circulating, especially global news or news that's affecting um, large global groups is certainly needed. And make sure when you're doing your research or investing in some of these assets that there is you can never predict it, but you can try and do your research to avoid getting in or getting out during a time where the world is on edge, if I could put it that way.
Yeah,
Um,
I think
yeah,
I
on
get
that.
here and be like, at the end of the day, something has to go up, right? At some point something goes up in this, whether it's a thing you expected or something else that you couldn't quantify. And while it's extremely dangerous, it's like in the history. Again, I haven't researched this for this talk, but off the top of my head, off of things I do remember skimming over, there's been times where longing wheat or beans, in a year or two time frame has returned some ridiculous amount, like hundreds of percentage, just because there's a global crisis and the food shortages, like in certain assets when you predict or put a bet into um, either um, puts and calls or whether it's just some other type of speculation, you don't actually have to own the asset. You just make a prediction on it and can get paid for it. So even if a lot of people are losing money, you can still make money. And while again, I feel like people get quite emotional about it, just because bad things are happening doesn't mean you have to lie down and give up also. Um, and so I guess something that I want to ask you, Hayaki, and I don't know if you thought about it, because I imagine these notes were probably made and researched a while ago, and you refreshed them recently, if I had to guess. But do you think that the US will stay on its higher end of the rate hikes, i.e., what was causing the market to move down, or do you think because of war and there traditionally been things that are a bit tighter, they'll resume either the printing or find some middle ground? Like, what do you think? It's going to be business as usual to beat inflation, do nothing, or pump it back up like we were after COVID?
Mate, that's a hard question. I certainly don't think we're gonna go back to where we were. In my eyes, I think you know obviously the market changes a lot during these global crises, but it's also an opportunity for our governments to change how they do their financing. Um, and it's seen as an opportunity by then to change how they're going to do it. I'm honestly not sure. Not yeah. Yeah. What are your thoughts?
Yeah, so they're the recent SEC. Or was it Fed? No, it's Fed. I'm pretty sure it's Fed. SEC is the ones with crypto. So I'm again, I'm doing this off the top of my head here. Um, the Fed did a half raise hike or standard, I guess. Some people call it standard, I guess. I don't know the technical term. I don't myself. A 25 point is the measure. Some people thought 50 basis points is what we're going to go up, and at that point we'd be looking a bit bearish. They call it hawkish, I believe. And 25 points was business as usual or bullish almost, right? They picked that, and then after that, because they didn't pick the extreme, there was some speculation that maybe this year wouldn't be as extreme as you'd imagine. That's where, that's where I'm basing my hypothesis without any research. This, I mean, I didn't look into this, but that's where I'm basing my hypothesis on the America won't want to look like the bad guys. They won't want to. If there's a hard time in their country, or for every country, not just theirs, every country, due to global supply shortages and such, they're not going to go and be like, well, we have to beat inflation right now. They care about people being happy, and I feel like we might get a bit more expansion in inflation, or at least level off compared to what people were thinking. Yeah.
Right. Okay. Um, I think that's pretty much it from me, though. If you didn't have any more questions, I want to share a couple of diagrams and stuff like that. I'll drop them in the Discord in our um information link. It's just they're pretty much just sheets. Um, I got one from the Wall Street in terms of the psychology of the market cycle. It pretty much just goes over um, the emotions that people feel, and the essentially just your trading emotion, which everybody feels at some point or another. But I do want to remind everyone that when we're seeing these market reactions, it's always happening because fear and greed is felt by a large collective. Individual emotions don't have much of an effect, but once things make it onto the news and they're widespread, they birth emotions in people whether they want them or not, and it either creates a cascade of buys or sells. So being able to stay on top of that and being able to not predict it, but be aware of the things that are happening in the world will help you stay just a foot ahead of everybody else, hopefully in the market.
I think a good example of that was the ApeCoin launch. Did you
Yeah.
see that? I don't know if you
I did.
saw it.
I didn't see much of it, but I heard about it.
Yeah, so pretty much everyone over on the days going up to it were like, we're gonna short the shit out of this. We're gonna wait for the pump and then just short it. And okay, it has been volatile. It has been volatile as heck. That there's been heaps of opportunities to short it and long it, but it didn't do what people made it sound like it was going to do, which was just nuke straight down
Yeah.
in the first day or two. Um, and the reason, like, if you understood the people who the airdrop was going to, you would get it more. Like, previous airdrops go to a community that's through a very large range of people who do very different things to one another, but happen to buy into the similar thing. The Ape Club, it's in the name, guy. Like, it's spelled out for you in their name. They don't care. Some people have been holding their shit since it was like point something of an F, and they're up here and it's 100th floor, and they're like, I ain't selling. You think because they got an airdrop, they're gonna sell that off? Because what? Because they're happy with their ape and they sell off every other extra asset they get, bro. That's not how that rolls. You gotta like, I guess whether it's war, whether it's an airdrop, whether it's anything, you gotta look at the community behind it and whether it's the world or whether that's a very small niche, and think about how they act towards anything that's happened in the past. Because that's the best you can do. You can then look at other people and how they're gonna react. So if you looked at the timelines wanting to short it, there's probably a good opportunity to long it. I wanted to short it too, said Nick.
Yeah.
Exactly, because everyone was angry and wanted to short it. But to short it, the people who get it have to sell it. And the people who got it are hodlers for life. So yes, there was some down movement because some of them were selling. There's got to be some, but that was a bait. But you can argue either way. It's gone up and down, and up and down. And it hit a high, and now it's lower than that high. So you could argue that you could have shorted the top, but to think you knew exactly what the top was in an abstract market in a way is kind of funny, because the prediction was it goes up and straight down, but that's not what happened.
Yeah.
Yeah. Anyway.
I think it's a good example too, because
Yeah.
as you said, the Bored Ape and the Mutant Ape holders are holders for dear life. Like they will fucking hold till the day they fucking die. Like,
Oh, if
and
you
like they've watched their ape go from whatever it was, point whatever ETH, as you said, to worth hundreds of thousands of dollars, and they refuse to even move it from a wallet or touch it or even look at it. Do you know what I mean? So what, these people love their ape and they love everything to do with that brand. So if you look at what market sentiment they're going to create when that brand comes out with its own coin, a governance coin, they're not,
it's love, they're
every-
gonna love it.
they're gonna fucking love it.
They're gonna
Most of them are gonna hold that shit for dear life.
They're gonna
So I
sell
mean,
their they're gonna sell their XRP and buy more ape. So
yeah,
anyway, sorry. No, yeah, but anyway, it's a good example of knowing who has control of something is as important as a general market sentiment, right? Like in every other universe, yes, you should short the shit out of it. It always happens that way. If you look at them without thinking about the community, all airdrops pump a little bit, dump, try to pump a second time or third time, and then nuke. But Bored Ape is a different breed, and you can't use, if you ignore the community, you'll get wrecked. So there's a lot of factors that go into things. I guess was the point there. And I'll let Haki say the last couple of words here if he wants to finish up, and then I'll jump onto what I was gonna do.
I'm pretty much done. So it's straight over to you with what you wanted to present, mate.
Oh, yeah, well, I actually
You ready?
realized I just said that because I wanted to finish drinking my beer, honestly.
Oh, no,
But
you're right. We can,
yeah,
we
put me
can
on
have
the
no, no. We
spot.
can, we can have a couple of moments
We
where
have
you
a
drink
beer
your beer.
break.
Yeah, we can have a beer break.
Oh,
It's a Sunday.
I'll just
Enjoy beer break.
it'll just be a sip, like
That's fine. You
glug
enjoy
glug
yourself, mate.
glug. It was good too. It's a nice golden lager. Anyway, so now that we've finished talking some shit and I finished bullying Hayaki on his research, I guess the first point was I think it was pretty good. We have to remember and put everything in perspective here. Um, I think that was probably one of the first research things Haki's done, maybe on his
Yeah,
own.
pretty much.
Yeah, so I think everyone can do whatever they want, but I'm gonna give a little round of applause Those
It's
aren't
worth.
me. Those aren't me clapping his cheeks. Those are me being happy for him in a different
Oh,
way.
don't you start
Uh,
now.
so anyway, now that's all wrapped up. That was good fun. I think we might do some more things like that. I'm gonna carry on from where we left off on the last podcast, and was a few different topics there. We started touching on permanent loss because it was relevant when we were talking about relevant risks and comparing assets. So we need to take a few steps back. At the time, it was relevant, but I guess to have a permanent loss in crypto, you have to be a bit deeper in crypto than just trading. So I feel like we should take a step back and we'll take it from the point of view as you have managed to get onto your exchange of choice, Coinbase, Binance, Binance US. What's the one that has the stadium?
Crypto.com,
Crypto.com. Yeah,
doesn't matter. Any of them.
any of them, right? So when you're on most of those, good job on a tough subject. Yo, got some fans out here.
Yeah.
Um, when you're on any of those centralized exchanges, they own all the tokens, and you just have a receipt for them in reality. So some people, once they finish trading or finish just accumulating in spot, they may want to try out the blockchain, try out their product. And I think trying out a blockchain or trying out the product, in a different way of saying it, is kind of important. How you meant to know, how as a user, how you meant to know what does it feel like to have the difference in transaction speeds between zero point 0.6 seconds, 1.3 seconds, and 5 seconds, When you're doing 20 transactions, what's the difference in those times? Okay. What's the difference in the gas fees? What kind of investor are you? Do you think in the future that more people will be an investor that doesn't care about time and money, but cares about prestige? Do you think the average investor cares about time but not money? Do you think the average investor thinks about both? Those are all things that you need to consider on top of the tech. Everyone loves talking about tech this, tech that. I'm in it for the tech, But if it takes you, an hour to do a transaction and $500, I don't care what it does. No one's using that. The public isn't using that, right? It's just not. No matter what cope you want to use for it, it's just not true. So you have to think about usability and where you fit into the user scale. If you have tens of millions of dollars, you might not care, about $100 transaction. You might not care it takes 20 seconds if you have enough money to buy enough assets and flip them, for 10%, but you have $1 million, that's 100K. It takes an hour to make 100K and it was pretty low risk, you won't care. But if you only have $1,000 and it takes an hour to flip something and it's not that high risk, but um, you only make $100, but gas was $500, you do care, right? You lost money. And that was some extreme example that doesn't exist anywhere, but it's something to think about. A lot of people that got rich in crypto from 2016 or earlier forget that if I'm trying to convince my parents or my friends or my grandparents to go into crypto, imagine trying to convince them to pay $50 for a transaction. The only people that are used to that are people that are used to having enough money to wire money across countries. No regular person is used to paying $50 for a transaction or 10. I think the standard in most countries on the max, if you're using a different company's bank or whatever, is like $1. Max, and that's for a once in a whatever transaction, not your day to day. I'm buying groceries and stuff, right? So you have to put um into reasonable parameters the expectations that everyday users have, because when people say we're early to crypto, okay, we're not early where you make 100x every other day, but we're early in terms of you still have to know some things to do a lot of things, right? If you think about other technology, um, there's two options. Either it's very, very simple and anyone can do it without prior knowledge, or the technology has been around where the current generation has used it since they were young and it's intuitive. And those are two very big differences. And because crypto is at a point where, the most of the world and most of the wealth is concentrated into people over the age of 40, like when I say most, I mean vast majority, not like 50-50 or 55, whatever. I mean, like 99% or 95%. I don't know the exact number off the top of my head. But the point is, unless they're willing to use it, there won't be money flow for a longer time period. And those are all things to think about. But anyway, kind of rambled, on why you'd stop trading and maybe want to get into crypto, which I maybe should have kept in the first episode. But
I'd like to say
yeah,
though, you should look at it more as an early adopter. As you said, it's not you're early into making, just because you're early doesn't mean you're going to make 1,000, as you said, $1,000 every second day, but you're an early adopter into the technology that's happening in the space. And that's probably a better way to look at it.
yeah, and for fun, I'll link back to the first episode because I can. And Amazon. Would you say Amazon's a garbage company? I dare you to try. I'm pretty sure Jeff Bezos might roll up to your house if you said that. Um, but they were founded back in 1990 something, 96, 75.
96,
Yeah. Anyway, the point being, it took a long time for them to get their foundations down, but once they did, they took over everything in America. Like anything they decided they want to take over, they took over pretty much. And so if you had purchased, the initial stock round, maybe like $10 a stock or whatever it was, you might have purchased it $100 and thought, oh wow, I'm so late. This company's been out for 5 years, 6 years, 7 years, and I'm out here with $100 purchased, when the initial buyers are at $10. And then, Amazon goes up to, hundreds of dollars, $1,000 per share. Okay. It's all about where the adoption is and what the technology can do, along with how easy is it to use. So back then, it was, not everyone purchased stocks. Now everyone may use Amazon Prime in America or may, watch Amazon movies or whatever. But, 20 years ago, the only people that interacted with them were a couple of their business partners and people buying stocks, right? And the rest of it was promises or potential futures. So my point being, to know the product, use the product. And there's various ways to do that. So back to getting off, centralized exchanges where you can't use the products, you just trade them or hold them or hodl them or anything like that. You first have to decide what do you do once you get off the centralized exchange. And again, I can link resources for how to get off them, but that's not the focus right now. The focus is what do you do once you decide to leave a centralized exchange? Where do you go? Etc. etc. So the first step obviously is to have a wallet that you that interacts with the chain. So most of the tokens I interact with on the daily are EVM compatible, which means I can use MetaMask or I can't remember the name of the other wallet browser. I'll link it in the Discord after.
Phantom.
Yeah, that might be it. There's a few wallets you can use. If you want to use Solana, then use Phantom with a PH instead, or some other wallet, etc., etc. Right? So that's the first step, making sure you have a place where you can store it, making sure you've got it set up, you have your 12-word seed phrase and all that. And I guess the only important part there is making sure you realize that at that point you are your own bank, you are your own asset manager, and you're in charge of it all. Right? So you've figured out, the first thing is what blockchain do I want to get to? And you've looked up what wallet do I use for that blockchain because they're not all synonymous. You can't just use any wallet that says it's a crypto wallet. There are parameters around which wallet takes which tokens for various reasons, which we can get into in the future. Okay, you've done that. What do you do now? You've transferred your wallet out of your centralized exchange to the wallet that's relevant. What do you do now? One of the first things you need to do is figure out the ecosystem. Why would you use that token on the blockchain? And I should say really quickly that not every token is meant to be used for day-to-day interactions, and transactions and such. But for for most, they do try and present themselves as the thing you'd do every day. So we'll ignore the few that don't do that and focus on that as the primary goal. Well, the first thing you'll do is look for a decentralized exchange. So instead of having your centralized exchange that holds your tokens, you can find a decentralized exchange and it usually lists majority of the popular tokens on that network. So you would, find the network name, search up, decentralized exchange, and then do a bit of searching to make sure that you thought that it was a primary one and not a fake one or a scam or some shit. You can look at like liquidity and a few other things to try and help you determine that. But we'll get into the safety in another episode. But that's your primary protocol. The decentralized exchange. That's almost the first step once you go into any blockchain for many reasons, but the main ones being it's pretty straightforward and safe. There's very few risks once you find the correct one. Most of the tokens that are freely available on there without doing any extra work are ones that are whitelisted by the exchange, which means they have low risk of being like a honeypot or just a straight rug or being very new. They've gone through some level of verification. Every blockchain is different, but there is some vetting for newer users when there's a whitelisted token on the exchange. The next step is you can either go to the creator's website or through the decentralized exchange, finding things out manually to look at different parts of the ecosystem. Where usually on the, if, say you're on, I'm just use Phantom because I use Phantom all the time. I know a lot about it. If you go to the Phantom Foundation's website, you can find out their current list of projects that have applied to them, talk to them, give them enough information to be listed as either decentralized exchange, farms, lending, etc., etc. They fall into categories, and you can look at all those and read their documents, see what they do, and get a feel for what do you use this token for, what do you use the ecosystem tokens for. And when I say ecosystem, I mean tokens that are reliant on that blockchain to exist. Um, and then you can find your way to what do you like, what is your goals, all that kind of stuff. And if you're just an investor, okay, you don't have to use everything, but you should know what's going on in the ecosystem so that you can say, okay, what do I think other people would buy this token for that I'm investing in? Even if you don't want to use it yourself, knowing what the token can be used for and what the experience feels like from a user perspective is underrated in terms of valuing something. If you think something sounds cool because you read, a document or a paper or your friends told you about it, and then you try and go onto the blockchain and use it, and when you use it, you want to smash your computer screen, do you think more people will get adopted into that ecosystem without change? Okay, maybe it will change, and you can factor that in, but right then and there, is anyone going to use it? If you, who has more experience than your friends or family who haven't adopted it yet, want to smash your screen when using it, do you think people who you talk to it about or people you don't know that you think might invest will actually use it for more than 2 seconds? And then once you've established that, then you can determine whether you want to be a user or not. For me personally, once I started using ecosystems, I never went back to a centralized exchange, except for very specific reasons that I don't need to get into right now. But the gist was once I got onto the blockchain and I learned to bridge, I learned to use dexes, I learned how to farm and a lot of other things. I never found the need to leave. Not never, never, but for the day-to-day interactions, there was just so much to learn, do, capitalize on that knowing how it all works is why I'm bullish on crypto, not because somebody said, it's a store of value of Bitcoin or Ethereum's the next big thing because it can do this, that, and that, or, Ethereum V2 is coming out, it's faster and scalable. I didn't have to rely on these things. I heard about the blockchains. Once you started using them and interacting with them more, you could be like, okay, well, I see why interoperability between blockchains might be important because when I want to do this over here, because I think it's more important on this blockchain, it's really annoying to get to this other one. So anyone solving that problem is saving me a lot of time and money and effort, and it's probably a good investment. Then, bridging between real world assets and crypto and all those kinds of things become very, very obvious when you use it. Because when they don't exist, it's really annoying. And annoyance is the easiest way for humans to understand what needs to be done. Because you think about it a lot, you're like, oh, I just don't understand why they wouldn't do this. And when you see someone doing it, you're like, yeah, that's that's pretty cool. Anyway, Haki, you can interject. I've been kind of rambling here.
No, no, I just think I want to like obviously you said we'll touch on security at a later time, but I did want to add, a lot of these DEXs, decentralized exchanges, have their own token, which you can find on. If you are worried about, I wouldn't go Google searching Spirit Swap, for example, because generally you're going to get a fake one at the top of the list or second on the list, um, and that's a security risk. So if you are curious about where to get the DEX's official links from, you can always go to places like CoinGecko or CoinMarketCap, and just look for their official coin, Spirit Boo, whatever the DEX may be. Um, like you, I'm on Phantom all the time, so that's all I think about. Um, and you can get their official site from there. So just going through those extra steps for the safety once you do enter the decentralized side of crypto, I think it's very undervalued and underplayed amongst new people when I think it needs to be something that is at the forefront of their minds at all times.
Yeah.
And like you said as well, I mean, once I've hopped off centralized exchanges, aside from a couple of nitty-gritty things that I do, or you know, small exchanges and stuff, I don't really leave like DeFi at all. Everything I do, there's always somewhere where you can move on to next, where you don't really have to move. There's always an opportunity or something new that's coming up or popping up that you can go into or explore next. So like you, I find myself in the never-ending rabbit hole that is DeFi.
And it's crazy. And I think something that I just do want to cap off here in this DeFi thing is when we get into it, I think learning how to navigate it safely and what it feels like to use it is the first important steps. Because anyone who tries to tell you how DeFi should be navigated or how apps should be navigated or dApps if you want to call them that, um, is kind of being egotistical because it's so new. It changes so rapidly. Some of these lending protocols, some of the better ones aren't very old, a year or two. Some, NFTs, just because they're getting popular in the last 2 years as well. And even then, NFTs weren't originally conceptualized to be used for profile pictures. So like they weren't even used. They're not even being used currently for their initial inception idea, use case. So anyone who tries to claim that something that's this new, they know what's happening right now forever, is a,
Bullshit.
a bit a bit optimistic on their end. Okay, yeah, full of shit. Yeah, a bit optimistic on their end. You know, things change all the time. You know,
Yeah.
protocols who are seen as the best, get hacked. Cream Finance has been a big one. It's a big lending protocol. It got hacked, but that hack led the way for um, a lot of new protocols to pop up and fix that and optimize what already exists. So yes, I think it can't be understated that there is a lot of risk.
And
This might be
that's sort of
riskiest.
where the joke comes from, where one day in crypto is like a year, isn't it?
Yeah,
Because it's like if you don't have your eye on the prize at all times, it just gets swept from under you.
it can be a bit
Um,
much. Yeah.
it is, yeah, it is like an endless tornado. And it's so rapidly changing, and that's why when you do go into projects or um, yeah, if you go into projects, you'll see they are rapidly changing. They'll bring out some sort of new optimization or utility or something almost every second day because they've just got to keep up with the torrent that is DeFi, just to stay relevant, and just to make the user base more friendly and more accessible.
Yeah, well, like you go back and you think about, Bitcoin started this whole race in terms of popularity, and then people will associate Ethereum because it survived the second season after Bitcoin, um, with the next generation. And even Ethereum plans on making changes, like I said earlier, EVM 2, is coming out. And you know, imagine being upset that you invest in Ethereum and then gonna have EVM 2, which is a large change to how the network operates. Imagine being like, well, I hate this now because it made a change. You know, that's how you know it's an emerging technology. If it changes a lot, it's an emerging technology. If it stays the same with bare minimum changes just to try and you know, increase the income a little bit, then you're near the end. You're at the optimization stage where they're just tweaking things slightly to make more money. That's that's near the end of the life cycle in terms of growth. I'm not saying it can't make money. I'm just saying in terms of the rapid growth, that's the end of the life cycle where it's tweaking instead of larger changes. Of course, there are some things that are made the way they're meant to be made at the start. Bitcoin has um, the advantage of being built like a rock. It's meant to do what a rock does, and that's fuck all.
Mhm.
And
It's
that's
done it. It's
you
done
know
its purpose.
it's done that. It does fuck all, and that's exactly what it's meant to do. So it's a bit easier, right? It's not meant to do anything else, but anything that's meant to do often changes. And I feel like people get into things sometimes and forget that it's so early in the volatility spectrum that almost everything's going to change. And I'll link it in the Discord at some point, and I'll show you what I mean. My background's in science, so I love like these types of graphs. But for new things, there's a volatility graph that shows the average distribution from a medium over time, and it makes a few estimates, but it's not important right now. But pretty much, as you'd imagine, it's very violent at the start and becomes into a smaller and smaller range as time goes on. So you feel better later on because the range isn't very big, but the opportunity to make advancements is much much lower.
Yeah.
Yeah, anyway, guys, I think this was a good, start back. We're answering any questions in the Discord. You can go to the Medium post. Otherwise, we will update a link in the bio on Twitter. We'll drop it in the comments of this video once we finish and edit it up a little bit. Um, yeah, it's been a while, and I thank anyone that's been here for this, podcast and accepting that we've had a rough few weeks, but we're back now. And for all the people that think we're going a bit slow or know more about crypto, I do apologize if you feel like this is a bit slow for what you may like, but we do want to it's not a step by step guide because it's a podcast, but we do want to put some of these more basic ideas out there, or maybe some things that other people have overlooked, um, out there as we start, because we want to build up. We want to start simpler, talk about some general concepts or general trends, and then slowly move deeper and deeper into the crypto space so that people who have never thought about this before can, start their thinking off kind of generally and then understand why we get to where we are and why, as a podcast, we happen to be teaching you or at least discussing ideas within crypto.
Yeah, and as you said, it's sort of it'd be nice to have a place where you can start episode 1 and let's say end on episode 50, and you've got a broad spectrum of knowledge going
But
into the DeFi space that you can question on, or listen back, question us, and gain a little bit of knowledge. But it's also going back to the basics as well. I think a lot of us that have been in DeFi for a long time, or just deal, if we're degens or something like that, we just deal in that. We forget about these basic fundamental things that we learn at the start of our crypto journey. So going back onto it just refreshes it in our brain, which is important, I think.
yeah, and as I see in the comments, the mantra in crypto is no different to business in real life, innovate or die, but crypto is moving 50 times faster. It couldn't be more true. Not only does innovation have to occur faster, um, because more people are aware of it as time goes on and more educated, but also you know, because of their education, it's compounding. If you've seen some good compounding charts, um,
Mm.
you know, it's not just people get smarter, it's people get faster at being smart. At least it feels that way. But yeah, anyway, thank you guys all for coming out. We'll edit
Yeah,
this video up, put it back up, and we'll see you again either next week or the week after. I think when they relook our schedule, like I said, we've both changed positions recently and been moved around a lot, so we may have to make these bi-weekly. But if we do make them bi-weekly, we'll be more active in the Discord. So thank you all for
yeah.
being here, and
Thanks again for joining